I found 4 stocks that pay massive monthly dividends. One of them even pays a dividend yield over 18% as of April 5th. If you stay until the end, somewhere in this video I'll throw in one bonus stock that could explode in the event of a recession. These are not recommendations, nor is this financial advice. Please do your own due diligence before investing into anything. All data is from April 5th, 2023. If your investing goal is financial freedom, then the objective is passive income. Therefore, the fastest way to get there is to invest in high dividend yield stocks and ETFs right out of the gate. This allows your portfolio to compound faster, meaning a faster accumulation of shares. Pair that with regular contributions from your active income, and you can replace your income before you know it. First on our list is the JP Morgan Covered Call ETF. It pays a dividend yield of 12.27%. It tracks the NASDAQ and sells covered call option contracts on those shares. It follows an OTM or out-of-the-money strategy, which allows you a chance at some capital appreciation along with the high income from options premiums. This is jepq. Next up is another JP Morgan Covered Call ETF. This one pays out 11.4% dividend yield and tracks the S&P 500. Like jepq, it buys shares in the stocks on the S&P, sells covered calls on those shares, and distributes the premium income and any dividends from the underlying shares to you. This is jepi. Following the trend of covered call ETFs, there's a relatively new one that tracks U.S. Treasuries and pays a dividend yield of 18.54%. They buy shares in another ETF that owns the 20-year U.S. Treasury bonds and writes covered calls on those shares in that ETF. This ETF is tltw, offered by BlackRock. The one that it buys is TLT. Before we cover our last and possibly the best high-yield ETF, here's your bonus dividend stock. This one, while it doesn't pay as high a yield as the ones on our list, tends to see consistent share price appreciation, and its earnings do go up in the event of a recession. It has locations all over the nation and is a place most people shop when times are tight. It pays a dividend yield of 1.09% but has consistent dividend growth. This is Dollar General, ticker symbol DG. Last but certainly not least on our list is another covered call ETF that pays a dividend yield of 16.13%. It buys gold and treasuries as it shorts the VIX or volatility index. It attempts to provide returns of 20 to 30% inverse of the VIX, meaning it does 1/5 to 1/3 the opposite of any change to the volatility index. Judging by its price action, its share price seems to remain within a stable range at the moment. In the event of a spike in the VIX, it also buys way out of the money covered calls on the VIX as a hedge in case another 2020 level event happens. This is svol or SVOL from the Bank of Newark Mellon. If you liked this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell so you don't miss out on our next video.